Welcome back. Today we're diving into the recent OPEC Plus decision, the one about accelerating oil production increases.
That's right. It's a significant move, and we'll be looking at the details, the possible reasons behind it, and, well, what it might mean for oil prices, Russia, and maybe even wider geopolitics.
Exactly. We'll explore the scale of the hike, some potential motivations, maybe quota issues, or even U.S. interests and the knock-on effects.
And we'll touch on that interesting perspective from President Trump regarding oil prices and the Russia-Ukraine conflict.
So lots to unpack. And hey, if you find these deep dives useful, we'd really appreciate it if you'd like and subscribe. It helps us keep bringing you this kind of analysis.
Okay, so where do we start? The decision itself was made on May 3rd, reported the next day.
Right. And it was for June's production levels.
Yes, for June. And the increase is pretty substantial, projected around 411,000 barrels per day.
Wow. Okay. And that's on top of a similar increase in May, wasn't it?
It was. So you can see it's a real acceleration compared to the smaller planned steps they had before.
Which naturally makes you ask, why the sudden speed up? What's driving this?
Well, beyond just market demand, which is, always a factor, there seem to be some internal OPEC plus dynamics at play.
Like what?
Sources are suggesting a key issue is compliance, or rather non-compliance with the existing voluntary production cuts.
So some members weren't holding back as much as they promised.
Apparently. Kazakhstan and Iraq were specifically mentioned, and it sounds like Saudi Arabia, a major player obviously, wasn't too happy about it.
They raised concerns at that May 3rd meeting.
That's the report. So it raises a question, if this compliance issue continues.
Could we see even more production increases down the line to sort of, compensate or pressure them?
It's definitely a possibility that analysts are considering. How else do you manage those internal discrepancies?
Okay, this is getting interesting. So they announced this big production hike.
Yeah.
What happened immediately in the markets? What did prices do?
They dropped pretty significantly, actually. U.S. benchmark crude, WTI, fell over 4% when trading opened on May 4th.
Over 4%. Wow. Where did that put the price?
It settled around $55.80 a barrel. And Brent crude, the global benchmark, wasn't far behind.
It fell too.
Yeah, down about 3.9%, hitting roughly $58.90.
And this connects to a bigger picture, right? Oil prices have been falling generally.
Absolutely. These drops just add to that broader trend. Prices are down, over 20% this year already.
So this planned surge for June, which you said was bigger than some expected.
Right. It definitely fuels those concerns about a potential oversupply hitting the market. Too much oil chasing potentially weakening demand.
Okay, oversupply, falling prices.
Cool.
Let's pivot to Russia. Their economy leans heavily on oil, doesn't it?
It really does. Hugely reliant. Oil revenues make up something like 30% of their entire state budget.
30%. So these price drops must be causing some headaches in Moscow.
Oh, undoubtedly. Lower oil prices directly hit their ability to fund government spending. It's a constant vulnerability for them.
And you mentioned President Trump had a specific take on this connection
between
oil prices and the conflict in Ukraine.
Yes, he did. Back in January 2025, speaking at Davos, he explicitly said he planned to ask OPEC to lower oil prices.
And his reasoning was?
His argument was that lower oil prices would, in his words, immediately halt the Russia-Ukraine conflict.
How so?
He argued that the high oil prices at the time were essentially bankrolling Russia's military efforts. Cut off that funding source, he suggested, and the conflict would have to stop.
That's quite a direct claim about the power of oil prices in geopolitics.
It certainly highlights that perceived leverage, yes. Whether it's quite that direct is debatable, but the financial link is undeniable.
So pulling all these threads together, we have OPEC plus accelerating production, despite already having voluntary cuts in place.
Right. Those cuts total 2.2 million barrels per day. And if this new pace continues, those cuts could theoretically be completely unwound by, the end of October this year?
That's fast. And it's happening even with worries about oversupply and maybe weakening global demand. You mentioned tariffs potentially playing a role there.
Exactly. Factors like U.S. tariffs can dampen economic activity and thus oil demand. So pushing more oil into that environment is, it suggests a potential shift in OPEC Plus's strategy.
A shift how? What are people speculating?
Well, beyond the compliance issues we talked about, some analysts wonder if it signals a desire by certain members, maybe Saudi Arabia, to align more closely with U.S. interests.
Connecting back to Trump's call for lower prices and maybe his anticipated visit to the region.
It's plausible, yes. It could be part of that complex calculation. You've got energy policy, pure economics, international relations, all tangled together.
And the markets seem unsure how to react overall. You mentioned mixed share prices.
Yeah, the reaction in global stock markets wasn't uniform, which kind of underlines the uncertainty around all this. It shows just how these decisions by oil producers ripple outwards.
Okay, so to quickly recap our deep dive today,
Yeah.
we looked at OPEC plus deciding to pump more oil faster.
A significant increase, around 411,000 barrels per day more for June.
And the potential reasons seem complex. Maybe dealing with members not sticking to quotas, like Kazakhstan and Iraq.
And possibly, just possibly, a nod towards U.S. calls for lower prices, maybe influenced by President Trump's stance,
We saw the immediate impact oil prices dropping, adding to a year-long decline.
which directly affects Russia, given oil makes up about 30% of its budget, potentially impacting its financial stability and maybe, as Trump suggested, its ability to fund the war in Ukraine.
In this whole situation, accelerating production while voluntary cuts are still technically in place and demand looks a bit shaky.
Yeah, it really raises questions about market stability going forward and what the long-term strategy is for these major oil nations. It really underscores that tight, complex link between energy, money, and global politics.
So a key question to leave you with might be, what are the longer-term consequences of this apparent strategy shift by OPEC plus Sporm? For oil-dependent economies, sure, but also for global energy dynamics overall.
That's definitely something worth keeping an eye on. The energy landscape is always shifting, and this feels like a potentially significant adjustment.
Absolutely. If this discussion sparked your interest, we definitely encourage you to follow the ongoing developments in energy markets. There's always something happening.
Thanks for joining us for this deep dive.
And please don't forget to like and subscribe for more analysis like this. We'll see you next time.